Welcome everyone, I'm Dave O'Hara, broker with Diamond Realty and Loan. We get together and do these workshops, webinars, first Monday at 4 o'clock of every month. First Monday. We do them at the Redlands Visitor Center, and you're welcome to attend in person, which people do from time to time. And of course, you can always attend online, which is probably simpler. And of course, you can share this with anybody that you think might be interested in Redlands Market Update. So of course, I do author this every month, first week of the month. I just finished it today for our workshop, but I mail this out to a lot of people that ask for it. As well, we email it out to our email list, and feel free to direct message, call, text, email, if you want to get on that list. But it talks about what's going on in the numbers. I love the numbers. What's going on in the Redlands market. So without further ado, let's get right into that. We've got a lot of information. Shouldn't take terrible long, but if you do have questions whilst we're going through it, feel free to send that in as a direct message. Again, you can email it as well, and you can call and we can do a short consultation and chat more about these numbers. So, Redlands Market Report. So this is important to buyers, sellers, and people that are just simply staying put in their property, because real estate is most people's largest financial investment. It's huge, and you do have to have shelter. I mean, it's awful nice to have a roof over your head, but it's double nice to call it your own. And often, at least nowadays, it's not unusual for your mortgage payment to be a little bit more than if you were actually renting the same property, but you're gaining appreciation. So you're making money while you're making these payments, and of course the note's going down, and your mortgage payment is fixed for 30 years if you have a fixed rate mortgage, but your rent payment is always going to increase every single year. It's very rare it ever goes down. So knowing the market, very important. Okay, so inventory and demand. So of course, seasons bring in their own fluctuation of the real estate market. Generally, starting in the winter is about the lowest. Spring comes, starts to build a little bit. Summer is the biggest time because it's easier for families to move during the summer. And so there's always going to be a fluctuation in values as well as interest. Not interest rate. Those fluctuate on their own, and lots of reasons. We can go through them for sure. But interesting that Redlands has had 174 listings last month. The interesting thing that I find of that is that, of course, it was 182 listings for September. So the listings have gone down, the number of listings have gone down a touch. But even more interesting is that about 35% of all of these listings get a price reduction. Now, generally speaking, those that have a price reduction, obviously it's either the seller is more urgent to sell, or they honestly started a little bit too high to start with, and they needed to come back down to reality of a sort. So there obviously there's more reasons, but those are the top ones that come to mind. So we do still see homes selling if priced right. But here's another interesting fact. Of the 174 listings last month, 50 of them sold. That's only 29% of the properties that were listed actually sold. Now, they sold in record days, and we'll get into that. But a year prior, 52% had actually sold. But 10 years ago, 80% of listings sold. So there's a decreasing percentage of listings that are actually selling. Question?
Yes. Do interest rates affect that?
So definitely. And we will cover a little bit about that, but since you asked, so a record number of mortgages, not just refinances, but purchases as well, went on in 2021 and 2022. Partially because interest rates were ridiculously low. They were in the high 2s and low 3%. 40% of the nation either refinanced or purchased. 40% of the nation has had a loan in that range, under 4%, which is huge for affordability. If the interest rate is 3% and then it's 6% with the exact same property not have appreciated one penny, your payment is nearly double. So if you qualified for a $2,500 payment, you now have to qualify for nearly a $5,000 payment. So yeah, it has a lot to do with it. So we were talking about percentages of listings that actually close. So at least for this year, and we illustrated 80% 10 years ago, 52% last year at this time, 29% now. It started off at 35% at the beginning of the year. It's gotten progressively lower in the percentage-wise, so less houses, regardless of how many are listed, are actually closing. So interesting. So of those 174 listings, that represents about 3.4 months inventory. Now, typically you would say that if there's 4 months or less of inventory, that's a seller's market. If there's 6 months or more, that's more of a buyer's market. So we're at 3.4, clearly under 4%. So isn't that good because there's not very many houses, lots of buyers? But yeah, you would think that's a seller's market. But I see more seller concessions now than generally. I don't see as many multiple offers. It certainly happens, but not as many. And when you only have 29% of the listings actually closing, I'm going to have to go with that's more of a buyer's market. That's not to say that you can dilly-dally and take your sweet time. If you find a property you like, buy it and negotiate with it. Certainly, if you have a good agent, they can certainly help you in that respect. Some of the factors keep an inventory low. So building permits are costly. They're very costly. Surprisingly unaffordable. But also building materials. During the pandemic, a lot of people did a lot of improvements and prices went higher. They've certainly come down, and the contractors are not as busy as they were during that time. So prices have come down, but they're still a bit high. And often you can buy a house for less than it would cost you to build. So price per square foot is a big indicator of that. Yeah, you can do a little research or we can chat about it. But that's very interesting, and that is part of the reason of why there's such low inventory. Not to mention, the interest rates of 2 or 3%, 4%, radically low. There's a lot of those people that even if they have a house that's too big, everybody's moved out except the man and wife, and it's too big. It's a lot of stuff to take care of. They're not selling it because they have such a low interest rate. Now they may keep it, rent it, and go buy another one, but again, that takes it out of the inventory pool of people buying. And that usually is where we get the move up buyers that make available then that starter home. But it goes the other way as well. It might be too big, and it might be something, or rather too small, and they might need to move up. But often they'll keep that home, go buy another one, and that's again the starter house. So the 2 or 3% interest rate has definitely taken away from our listing pool. Let's see, household formations, very interesting. Millennials lead the way in household formations, obviously, because 1977 and 1992, right? 30% of the population are millennials, 35% of internet users of the population. Now, back in 22-23, they led the way in purchases. They were 38% of all purchases. Because of affordability, like we just chatted about, they only make up 29% now, which is, still, they're 30% of the market, so that still is hand in hand, but they were the majority back in 22-23. Very interesting, but, when interest rates double, and interest rates today are around 6.5%, so when they double, the house payment doubles, so it's hard to afford. Okay, so let's talk more specific about Redlands and some numbers. So median is a number that I like to talk about in reference to properties, real estate, because, but we need to understand it, so let's define it first. Median is the third house that sold out of 5, or in our case, because 50 houses sold last month, that's the 25th home. It's not the average, it's not anything but the 25th home out of 50. So when we talk about median sales price, it's down 4% for year over year, and that's the other thing. Median is good to look at year over year. So now we're talking about October, because this is just barely November. So October median sales price was $630,000 as opposed to October of last year, $692,000. So that's a $62,000 difference in drop. But let's look at that. That doesn't mean that the home values have dropped, but that the median price of that house sold dropped. So if you have more houses that are expensive selling, well, that's clearly going to increase the median sales price or list price. If you have more houses that are less expensive, that's going to decrease it. So all that means is we're probably having more houses that are less expensive selling rather than more expensive, to make that 25 out of 50. All right. Also, median days on market. So median days on market for last month, 26 days, down from 38 days the previous October. Now, that also is another interesting one to think of. Clearly down 21%, but does it mean anything? Well, of the houses that are getting into escrow, right, 50 of the 172, those ones were priced right, marketed right, and went into escrow quickly, 26 days. Could easily have been a year ago that days on market were longer because they were priced a little higher or they weren't given as many concessions. So we have to consider all of those kinds of things. Sale to list price ratio. So 98 is our number here, 98%. So if a property is listed for $100,000 and it sells for 2% under its list price, that's $98,000. Boom, that makes up 98%. Or if it's listed for $200,000 and it sells $4,000 under, that's still 98%. You can do the math. But that's staying pretty consistent. Staying pretty consistent from September, October, as well as a year ago, October. At about a year ago, October is 98.7, but it's still in the ballpark. It's still listing and closing just barely under what it lists for. So that's pretty good. The larger number you get either way is even more interesting. So if it closed at 102%, listed for $100,000 and closed for $102,000, well then that's really a seller's market because buyers are bidding it up. Goes the other way as well. And we talked briefly about price per square foot. So you can talk to your construction buddies and ask them what would it cost to build a house. But generally speaking, for a house you're going to live in, and it's not just a Home Depot type, Lowe's construction type stuff. If you're really going to live in it, it's going to be nice. Probably about $300 a square foot, just for the structure. And then you have hardscape and softscape, right? You have plants, you have driveways, those kinds of things. Price per square foot increased from $364 in October of 24 to $372 in last October, which doesn't sound like a huge increase. It's actually only 2%, but it is an increase. So I do like seeing that in reference to gaining money on your investment, appreciation, that kind of thing. If you're interested where any of this data comes from, it pretty much all comes from the Inland Gateway Association of Realtors. You could probably get it from Mrs. Google as well. But all right, so buyers are eagerly searching. So they are eagerly searching, but they have to find the right deal for them. There's only 28 days on market in October, 38 prior month. But if we look at the 50 homes that sold of the 174 listings at 29%, 35% the month prior, which is interesting, But you also have to go back to the seasonality of real estate. So summer's over. So vacations, for the most part, are over. People are getting ready for the holidays, and sure, there's a little travel in there, but they're not wanting to upset the family. So values are always going to soften up at those times. Doesn't have much effect on interest rate, but we will talk a little bit about that, in that, the federal funds rate is short-term rates. And the feds met 2 weeks ago and reduced the federal funds rate. So it was right around 4 1/8, and they reduced it by a quarter. They're also anticipated, about 90% anticipated, that they would also reduce the federal funds rate in December. I think they meet on the 10th, December 10th. It's down to about 60% now. So why do I talk about the federal funds rate? Well, short-term rates influence long-term rates. Mortgages are 30-year fixed mortgage. That's a long-term rate. But it's influenced by the short-term. But we knew they were going to decrease by a quarter. So the markets had already, put that into play. But then, of course, Powell comes out. He's the Fed chairperson, right? He comes out and talks about the reinvestment. So they have, not to get too complicated, but they have interest rates, then they have their portfolio, right? Their book of business. And they can buy and sell treasuries and have runoff of treasuries to reduce their balance sheet and these kinds of things. He came out and talked about how they were not going to let it run off. They were going to keep reinvesting, but they may reinvest in short term instead of long term. That didn't go over well with the mortgage interest rate type people. And so the second he did that, blam, interest rates went back up. Now they're coming down, but it's never a straight line. But that was a bad day for us, and it hasn't come back. So what may have been a 6.5 rate, depending on FICO score and loan to value and such, what would have been 6.5 is now probably about 6 5/8, 6 3/4 ish. But again, they will continue to come down because A, affordability, B, confidence in the economy. A lot of people talk about the tariffs, which also, a lot of our wood for construction comes from Canada. Certainly tariffs can affect that, as well as precious metals, not those precious metals, but copper, aluminum, steel that go into construction. Most of that is a lot of it rather is imported, or at least pieces and parts. And so all of those types of things, tariffs and such, consumer confidence, interest rates, they all go into affordability, which has not improved a bunch lately. All right, continued growth in Redlands. Well, of course, gas prices are at about the lowest point that they have been in the last 4 years. I paid, I think it was $4.02 this morning for a gallon of fuel, which, thanks Costco, I appreciate that. But they were $3.98 last week, so it went up 4 cents. Not ecstatic about that. Anyway, gas prices are the lowest in the last 4 years. Unemployment seems to be pretty steady at 4.2. So, of course, the government's closed right now. So, Bureau of Labor Statistics, the BLS, they're closed. They're not issuing reports. Doesn't pain me too much because their labor stats have been drastically corrected after a month of them putting them out. They've been off target quite a bit. But who's that other big payroll company, initials? I'm not thinking of it right now. Anyway, theirs are always pretty good. They're anticipating some layoffs, lots of layoffs. It looks like the unemployment rate's probably going to increase. If the unemployment rate does increase, that does lend to the whole economy, and you could definitely see federal funds rate continue to come down. Maybe that 60% chance of it coming down in December could go back up to the 90 or 100%, which does influence long-term rates, so therefore mortgage rates could also come down. Okay, and we did talk about feds, yeah, and what to expect when selling your home. So, so we've talked a lot of numbers, and I generally talk a little bit quick because I got a lot going on in my little brain, but when selling a home, you deserve to get the highest price you can. best possible scenario in the shortest amount of time. The way to do that is to make sure that you go with a seasoned, knowledgeable real estate agent, not just somebody you know, but somebody that you know can do these things. They need to know the numbers, they need to know the ins and outs, need to be able to negotiate, but you got to start responsibly. So he or she, your agent, would certainly gather comps and present them to you and have a conversation about this. You, the homeowner, are the one that sets the value or the listing price, not the agent. He or she can give you recommendations, but please try and be responsible about that listed price, because if you're one of the 35% of listings that gets a price reduction, that's not to say it's a bad thing, but you probably blew the first 2 or 3 weeks, which is the most important. Remember, 26 days is the median for getting into escrow. So if you blow the first 21 days to 3 weeks because you priced too high, then that doesn't lend well. Again, if only 50 out of 172, 174 homes are closing, you want to be on that side. You want to be part of the 50. So price it responsibly to start with. The 3 Ds, depersonalize, declutter, and deep clean, always important. But if you're buying a home, so buyers, I think, have a bit of an upper hand right now, but they do have to be expeditious. They have to be quick about it. If you're thinking about buying a home, certainly you want to get pre-approved, not pre-qualified. Pre-qualified is we have a conversation and you go, yeah, it sounds pretty good. I think you're good. Pre-approved, if you supplied all the documentation and the money is literally reserved and waiting for you, you just need a property to apply it to. So get pre-approved. It comes with a letter from your investor, your lender, and you can present that with your offer that makes your offer look so much more solid. But when you find that house, make sure you already have your pre-approval, make sure you have your agent that's helping you with this, and get that offer in quickly. Make it a responsible offer. You can always ask for more after the home inspection, after the termite report, after these kinds of things. You can ask for concessions more as well later, but get it into escrow. Okay. And if there's anything that this has brought up to you that you'd like to chat with me about, feel free. Direct message me, call me, 909-376-8399. You can email me, david@aboutredlands.com. I'm the broker with Diamond Realty and Loan. And again, we do these little workshops. Sometimes they last a little longer. I often like to have a guest, but I really like to have a recommendation, suggestion from you, the attendees, of what do you want to know? What do you want us to chat about? Some people think it's very interesting that you can actually buy a house and get a loan with no tax returns. You can. If there's a bank statement loan, 12 months bank statements, what your deposits were if you're self-employed, that's your income minus a overhead factor. There's DSCR loans, debt service coverage ratio loans, that you can use rents on proposed properties that you're going to buy as your income. There's tons of this kind of stuff. You can buy an FHA 3 or 4 unit house and use the units that you don't occupy. Use those rents as your income. So there's a lot of things we can talk about. I love chatting about all of them, one-on-one or in a group. So feel free to let me know. Thank you for attending. Again, I'm Dave O'Hara. Appreciate your time.